Hi, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi, and it's not looking as good afternoon as it could have, and that's because the Indian markets are much under pressure right now. In fact, they've given up the lows that we had seen in the month of September, below the mark of 24,800 right now. And as we are, heading, it looks like we'll perhaps go below the mark of 24,700 as well. Remember, 700 to 800 was that crucial zone that a lot of technical experts were telling us is the near-term bottom or a floor in place for the market. So if we go below that, it will be breaking off another important level. So just watching out for how things pan out from here on. But definitely a lot of carnage on the screen. In fact, if you look at the last 5 to 6 trading sessions, the BSE market capitalization has eroded more than 26 lakh crore rupees. So that's the kind of value and wealth erosion is what we have seen over the matter of just 1 week. So if you were looking at your portfolios a week ago to now, there would be a lot more red as far as that is concerned. And the portfolio weakness is much visible on account of the weakness in the broader market. So you're, of course, Nifty and Bank Nifty are lower. But if you're looking at the broader markets, that is the small cap index and the mid cap index, they are seeing deeper cuts right now, over 3% cut coming within a day itself. So that's the kind of pressure that we're witnessing. Most of the sectors are in the red. It's only Nifty IT which is trying to hold its head above water. But other than that, the PSU sector is down and out. PSU banking index, for instance, down almost 4% right now. Energy, media, pick up any of these sectors, down over 3%. So clearly a lot of pressure, Aisha, and whether you call it the factor that FIIs are moving away from India to China, or that we are, kind of coming under our own weight, but definitely something getting undone in this market.
Oh yeah, absolutely. Look at individual names as well, also stepping into the earnings season, and the Q2 updates are coming in thick and fast. Of course, Natco has had that settlement order in the patent case over generic Ozempic, so that's one stock which is definitely in focus. But Q2 updates from macrotech developers stating that they've had the best ever quarterly pre-sales, which has seen an uptick of 21% on a year-on-year basis. So that stock has been, definitely in focus. Although real estate as the segment has underperformed all through last week, with macrotech today holding up about 2.5%. Titan, their Q2 updates as well came by over the weekend, and they've seen a 75 net store addition in the quarter gone by, growth of about 25%, but stock lower by 2.5% as we speak right now. There has been weak studded mix, and that may dent the margins. So maybe Street is penciling in that a little bit. Having said that, it's a little surprising because we really seem to be the global underperformers once again. Like Anisha flagged off, that adjustment to China perhaps may be happening, although we are awaiting China opening after a good week-long break. That's only going to be tomorrow. But Asia's not done bad at all. Even periphery markets like Australia managed a gain of about 0.6%. Japan held out by a good 2%. Hong Kong was up 1.6%. And European markets flat, with a very, very marginal negative bias. And the US futures as well are not really indicating a huge move down. They're less than 0.5% lower as we speak right now. But let's try and understand the China puzzle a little bit better. What could it mean really for India and, of course, other emerging markets? Sean Rain, China market expert, joins us on the show right now. Sean, hi, afternoon. Thanks for taking the time out and speaking with us today. How meaningful, Sean, does it seem like the China story could be after the slew of stimulus that one has seen? Because it really seems like whatever it takes, make or break kind of movement going by the PBOC action last week.
It's great to be here. If your viewers know about my background, I'm American, but I've been in China for 27 years. And there are really only 2 times that I became extremely desperate and anxious about the economy. The first was in October 2022, when China was at the height of the zero COVID madness. The second time was in August and September of this year. Business and consumer confidence plummeted. You look, youth unemployment hit 18.8%. Secondhand sales for homes dropped 8% in terms of value. So the Chinese government had to launch what I consider to be a mini bazooka-like stimulus right before the golden holidays, in order to try to rebuild confidence amongst and animal spirits amongst the wealthy consumers, to try to get the economy going again, get consumer confidence moving so that you could see businesses invest more and consumers, at least at the wealthier level, go out and shop more. So they launched the stimulus. I've been recommending to all of my clients to buy Chinese equities. I still think we have 1 to 3 weeks minimum where prices are going to continue to go up because the valuations were too low. Let's be honest. In September, valuations at a P ratio were down to 8, 9 times. Now it's around 12, 13. Japan is at 18. So I still think we have 10, 20% movement on the positive side for Chinese equities minimum in the next 1 to 3 weeks because the government has to get confidence back, get people like me who are super anxious in August and September confident in spending again.
The popular belief is that the money that's flowing to China is but tactical in nature. Do you also believe so?
Yeah, it's tactical because what's happening is the government doesn't want to reinflate the real estate bubble. That's why the real estate prices drop 20, 30%. The government doesn't want to reinflate that because that could cause a systemic risk to the country's financial system. I believe that the government wants to strengthen the capital markets over the short, medium, and long term because you need a healthy capital markets in order to have a thriving economy. So the government wants to let everyone know we've spent 8, 9 months. They just appointed Wu Qing to be the head of the CSRC earlier this year. Since they've appointed him, they want to let everyone know we're auditing all the companies. We're cleaning up all the fraud. We're cleaning up all of the corruption because we want Chinese to be able to increase their overall net worths over the next several decades by being able to invest not in real estate, but in equities. If you look at it, in China, only about 10% of the population buys equities versus 70% in the United States. So the government clearly wants to have a mini bazooka-like stimulus into the equity market in order to have a stronger economy, in order to get consumer confidence growing. Now, I don't know if this mini stimulus is enough to improve the economy. That's why hopefully tomorrow the NDRC is having a meeting in the afternoon so that we're hoping we'll launch a fiscal stimulus because everything so far has been based on the monetary side to improve the equity market. But again, as I said, youth unemployment is 18.8%, fixed asset investment on the private side is near zero. So we need to get the real economy growing. So we're all waiting to see, is tomorrow going to be the time where a fiscal mini bazooka-like stimulus is launched? That's really important because the country is facing structural issues. And let's not forget, it's facing major geopolitical tension between the United States, where the Biden regime is trying to contain China's economic growth. And really, unfortunately, China and India can't seem to get on good relations. It would be great if India and China could get on good relations because that would help the economies of over 2 billion people. I don't understand the tension at all between the two countries. People are fighting over some stupid rocks.
Fair enough. Point taken, Sean. But you're talking about the mini bazooka that Street is watching out for tomorrow. If it doesn't happen, do you see any of these, this rally getting undone?
If the measures tomorrow are not clear, if it's a lot of lack of clarity, if it's not big, then the rally could come undone. Because right now there's a lot of, when I talk with hedge funds in the United States and Europe, there's a lot of wondering, is this a dead cat bounce like, in Japan during their decades of stagflation and stagnation? You basically saw 4 periods where the equity markets went up, but then they collapse again. And there are a lot of Western investors that are very cautious and they think this is a dead cat bounce. I tend to be a little bit more optimistic and think we have 1 to 3 weeks minimum where we could grow up 10, 20%. But let me be clear, if you're an investor, I would not be putting money into Chinese equities and holding it for 5 years. You can't do that in China. You've got to put money in. You got to look day to day. Maybe you should get out after a week. Maybe you should get out after a month. You got to remember, JD.com, one of the biggest retail, hit around 96 Hong Kong dollars per share. Right now it's around 180. So it doubled in the last 2 weeks. That's a little frothy to me. 2 weeks ago, Walmart, one of the biggest investors in JD, sold their entire stake in the entire company for a little over $1 billion. So they left $1 billion off the table. So there's still a lot of bears out there. There's still a lot of people in the West who don't believe this is a real sustainable bull market. Again, I think tomorrow we're going to hear a lot. That's going to be key for the NDRC to instill confidence by saying we have a fiscal stimulus aside from just monetary.
Okay, so, but then given the fact that there is so much under ownership and disbelief about the Chinese market, why are you perhaps just saying that another 10-20% in a couple of weeks? Why don't you see it as a bit more long-term in nature? Because there is a lot of money which is waiting by, and clearly a lot of people are underinvested in China.
Yeah, absolutely. I'm saying 10-20% minimum in the next 1 to 3 weeks, but you got to keep your eyes on the ball, right? China is something that there's a lot of volatility. You might see people who bought JD or Billy got double their value in the last week, and they say they want to take profits and get money off the table. There's still a lot of fear from Western investors, which I think is misguided fear, that China is uninvestable. A lot of people think Xi Jinping and the CPC are anti-rich, anti-business, and we're turning back to a 1960s, 1970s Maoist type era. I disagree with that. The reality, though, is most Western investors, even the ones that invest in China, are completely ill-informed about what's going on in China. They were locked out for 3-4 years because of zero COVID. They've been misinformed by Bloomberg and Western media outlets that China is uninvestable. I actually had a call today with a hedge fund investor based in the US, and he asked me, Sean, is it safe for me to come and visit China, or am I going to get arrested? So there's so much misinformation, xenophobia that's being spread about the country that investors need to be cautious, and you can't say we've got a 6-month movement. I'm going to say 1 to 3 weeks minimum, could be longer than that. But if you get 20% gain in 3 weeks, take your money off the table.
The money off the table. But Sean, in those conversations with those hedge fund managers, did India find mention as well? How they're looking at India, if at all?
Look, I want to be clear. When it comes to China, I'm the best in the business. You've seen my track record for 25 years. I've called it way more right than wrong. I am not an expert on India, so I don't want to mislead the audience. What I will say is a lot of investors thought that China was so uninvestable that they started investing in India and Japan. Not because they believed in India and Japan, but more they didn't believe in China. So I think you're going to see a pullback, especially from the Japanese markets, because I think it's too frothy there. You have an 18 PE, even though you've got an economy that's barely growing, if growing at all. So I think I think Japan's going to come down. That money's going to flood into the Chinese equity markets. India has been hot the last couple months. Obviously over the last decade, it's outperformed the Chinese equity markets, but I think India has a chance to come down a little bit in the next couple weeks as people reallocate and chase alpha in the Chinese markets. So India is still good over the long term, but in the shorter term, there might be a pullback.
Okay, point taken. Thanks, Sean, for making time and speaking with us. We will speak with you perhaps in a couple more weeks to see what really happens and how it really pans out. So that's the latest on China. Expect at least 10-20% bounce further from where we are, given the fact that the street is expecting fresh stimulus come tomorrow as well. But let's just focus and talk about an exclusive that we are bringing to you here on ED Now. We learned from sources that the Finance Ministry has expressed support for lenders with respect to RBI's draft project financing norms. Remember, stocks like REC, PFC, IREDA were the ones which are getting impacted on account of that. What's the latest and which way is it exactly expected to move from here on? We have our colleague Prakash joining us with the latest on this one. Hi, Prakash.
Yes, we are learning from our sources that the Finance Ministry has supported the industry's views on RBI's draft project financing norms. In fact, Finance Ministry seeks fair amendments to the draft proposal. We are given to understand that the DFS has raised its concern with the RBI and adjustment to the 5% provisioning norms. Along with that, DFS also finds that current proposal could be a disincentive for the industry, and therefore fair amendments are needed to ensure sufficient trade flow to the infrastructure sector. As you are aware that all these stakeholders have submitted their comments to the RBI, and there's a possibility that the draft proposal could put more pressure on the bank's balance sheet. Therefore, DFS is likely to hold another meeting with the RBI before the final guidelines are issued. Sources are also informing that the RBI may issue final project financing guidelines before end of the current financial year.
Okay, that's Finance Ministry supporting the industry view on the RBI norms. We'll take a very quick break, continue tracking markets on the other side. Back with closing trades right here in ET now. 260 points lower for the Nifty futures right now. Most sectors under pressure, other than, of course, few spots of green when it comes to IT. LTIM, Infosys, Emphasis, Persistent. These are the ones which are actually springing up. And so is Bharti and ITC, to be fair. And Bajaj Finance as well is managing to hold on to the green. Don't know for how long, though. Coal India, Adani Ports, Power Grid, Adani Enterprises, NTPC, the energy infra pack is the one which is buckling under pressure today, as is SBI, which is down a good 3% almost as we speak right now. In fact, the Nifty Bank, I think, has actually broken that 51K mark as well. Let's just bring up that intraday graph for you. No, not quite. Or I think it did, and then it's recovered from there. Kunal, any reading on the Nifty Bank?
Yeah, this is a very good recovery in the last 15-20 minutes, half an hour or so. We've almost recovered 1,100 points on the Bank Nifty. So from a point where we were almost 1,300 to 1,400 points down, we are just about some 200 to 50 odd points down. That looks like a normal day for the indices. After, of course, what's happened over the last 4-5 days, this could probably be calling for a good recovery as well as maybe a near-term bottom in place for our markets.
And all led by ICICI Bank single-handedly, actually, because other than that, most of the large cap banks are still under pressure. ICICI Bank is the one which is pretty much mirroring what you're seeing on the Nifty Bank right now, holding up 1.25%, still, I think, away from the day's highs, however. Let's welcome on board Daljit Singh as well and talk about what he's making of the market right now. Daljit, hi, afternoon. Lots has happened, at least from last week, and now we're awaiting China's open tomorrow. What's the strategy in the market for both long as well as the short-term players?
Good afternoon. No, I think we are taking this as a positive for the market, mainly because this requirement, this was required. No, a lot of froth was getting built up at various points, and certain stocks where for last many days, in fact, for last 1.5 months or so, we would have met at least 20-30 companies, and everywhere you like the model, but the problem is the valuation. The price itself has gone much ahead of the fundamental. Some places even 2-3 years hence, whatever is the earning coming, that has been discounted yet at present only. So even though you like the company, even though you like the business model, it becomes uninvestable. Now, in that situation, I think it is but natural that a market will realize this kind of anomaly, and there will be some reasons. It can be any factor which will come in, and then that froth will go away. So to that extent, I think this was expected. This is good for the market in the longer run. Maybe some more froth needs to get out in certain other pockets. Good part is that in terms of our portfolio, we were already positioned towards things which were at reasonable valuation. So we have avoided PSUs, railways, defense, those kind of stocks. We don't own in our portfolio for quite some time now. So I think to that extent we are safe. And the pockets where the valuations are reasonable, they still continue. So I don't think there is any change in the fundamentals for those. For example, pharma or agrochemicals or consumption theme. Things on the on-ground reality remains the same. So it is just that the technical factors which are playing at this point of time, and one should be able to utilize those factors in your advantage.
Okay, that's the latest coming in. But look at the markets right now. What a solid recovery which is underway. I mean, take a look at Bank Nifty, almost, kind of nudging towards that flat line as we speak. Even Nifty, for that matter, a very, very sharp bounce back. Almost 2.5% is what it's indicating from the lows of the trading session for Nifty Bank. And even Nifty now moving towards the green line. In fact, Bank Nifty is in the green if I have it right. It's ICICI Bank, which is suddenly shot up 1.5%. Kotak Mahindra Bank, IDFC First Bank, AU Small Finance Bank. These are the ones which are holding out in the green. AU Small Finance Bank was in the green throughout the trading session on account of the Q2 updates being strong, but it's the other names which are actually putting the move on the upside. And clearly, ICICI Bank, as Aisha also pointed out, is the star performer which deserves the mention of this big move which is underway. Trent, ITC, as well as Kotak Mahindra Bank, these are some of your other gainers as well. Naresh, a quick view on where the market is headed, and is it fair to say that 24,700 is now a very strong flow for the market?
So early to say it, but first indications have come back in terms of the recovery in Bank Nifty today. So if we sustain this for a couple of sessions, that indicates a short-term bottom could be in place. And more importantly, the selling has been more concentrated in the heavyweight. So if you look at Reliance Industries, for example, the stock is back to election day lows of 2730. That's the price point where Nifty was around 21,500. So we've seen the heavier the weight in the index, sharper has been the correction, whether it is a Reliance or an ICICI HDFC Bank. So clearly suggests it's a flow-based move, and it should find its floor in the next coming couple of sessions, given that China opens tomorrow. But overall, the structure is getting into oversold zone. So 24,700, 800 is the previous swing low, and 24,200, 24,000 is the major swing low of August. But a lot of stocks have come closer to 24,000 price point in terms of after the correction. Reliance is down 13 to 15% from the top. So that tells you how deep the correction has been in stock specific names.
That's the market mood right now. But Diljit, wanted your sense regarding a couple of these so-called new age tech companies, and I'm talking about Ola, Paytm, Zomato of the world. You have on one hand the Ola founder engaging in a war of words over the social media platforms, while on the other you had Dipinder Goyal making deliveries with his colleagues as well. And Paytm today is down almost 6-7% in the trading session. What within some of these names would you like to bet on?
So as a disclosure, as of now, we don't own any of these names. But I think some of these guys have started showing some path to profitability. Market was under a lot of stress earlier because there was no clarity on when will they reach that profitable growth. So growth and addressable market, we all know that is a very well documented thing now. Everybody understands, yes, there is a lot of potential. But unless you make money, the minority shareholder don't get anything. Now, I think some of these companies have started showing that that they are cognizant of this requirement, and they have started taking some action on that. Maybe some more time one needs to give. Within this space, I think the fintech guys, especially the ones which are more inclined towards insurance, etc., we tend to prefer them versus the other ones. But as of now, we are still in the evaluation stage. We are not holding any of these stocks.
That's the take coming in from the new age companies there. In the meantime, while of course the rally is led by ICICI Bank right now, but take a look at Axis as well. Kotak too, by the way, has now jumped back into the green, and Axis as well is making quite a bit of attempt. A 1% uptick, or rather downtick, is now just what you're sitting on. But can't say the same about some of the other spaces like power, telecom, infrastructure. These are the names which are getting fairly beaten down right now. Daljit, wherever the market does recover from this, and the liquidity does settle with China, which are the pockets you don't think will come back to their heydays? Any sectors which you would say avoid right now because they've seen their best already?
So all the sectors that last 1.5, 2 years, they were in vogue. We talked about like PSUs in general, maybe the stocks in defense sector, the stocks in shipping kind of companies, those kind of companies. I think I don't expect those prices, the peak prices will come back in next many years, maybe. Not that these companies are bad, and not that they will not perform. Financials will come better, but problem is that you have already paid them so much. So if you have already given the valuation which it deserves 2 years or 3 years hence, then there is only one way, which is the time correction. So you have to hold it and wait for that time period. I think those are the sectors, capital goods, some of the companies. Although we are very positive on power and that related space, renewable space, but you have to find stocks within that space which are not that kind of obscenely priced. No, taking a manufacturing company, whether it is in power space or whatever, at 80 time multiple, 100 time multiple, I don't think that will give you any good alpha returns. So those pockets, I think, will not come for a very long time at the same peak prices.
You also believe that some of those popular defense names have already seen the peak for this year?
Yeah, I think peak for this year, and they'll take a lot of time to try and recover because even last time we saw many of the PSU stocks, for example, 2022 when the rally started off for many of the PSU names, there was a phase where the correction consolidation lasted for almost 9 months on a trot, and we are just in the third or the fourth month for these stocks to get back into a price correction. Now, the worry or the concern for these stocks when they are going through this corrective phase is that the volumes have not inched up higher. So typically, when you see an exit from delivery buyers into these stocks, you see a high volume selling into these names. But right now, these stocks are just going through a natural flow of low volumes price correction. I believe that a major bottom generally gets formed when you see a high volume price correction coming into these stocks. Maybe that could be another couple of months down the line. So I think one should wait out for better price points, better opportunities to try and bottom fish these names.
Okay, wait for better opportunities. On that note, Daljit, we'll let you go. Thanks so much for making time and speaking with us. In fact, slipping into a very short break. Don't go anywhere. The market is fairly volatile. We'll track the last 30 minutes when we come back. Welcome back. There is a bit of a recovery in the market which is underway. Let's see whether it sustains or not, because for now, whatever gain that we're seeing on the bank Nifty when it moved into the green has been given up. So after that 1,000-point recovery, it's again down in the red, and again as sharply as the rise was. So very, very volatile. Kunal, how to trade this market? Is it even possible or just sit on the sidelines? Because by the time you probably book something or you probably make a fresh order, I think the market mood has changed.
Yeah, I don't trade this market. Be the audience, this time around. But I think, the last 2 days, what we've seen is, some fight back which has come back from the bulls on intraday basis. Now, of course, the fight backs are not lasting, and you're not seeing the bank Nifty getting back into a recovery or sustaining the recovery. But nevertheless, that indicates that maybe I think we could be, at a zone where the bank Nifty sooner or later would probably try and find a bottom for itself. Now, what matters over here is that if the global markets, if they start to get back into a some sort of a negative correlation, that's where our markets would probably try to get back into a bottom formation zone. So, for example, right now we are seeing many of the global markets sitting on a much more stronger price trajectory. Our markets over the last 4-5 days have gone through a correction. If that starts to reverse and you see some of the global markets getting back into a corrective phase, maybe that could probably indicate our markets finding a bottom. So I think over the next couple of days, we need to see whether there are more intraday bouts of recovery and whether the Nifty holds on to that critical supports of 24,500, 700 mark.
Okay, let's welcome on board Anand Tandon as well and find out what he's making of the market right now. Anand, hi afternoon. Just wait and watch when the dust settles down and then perhaps take a call on whether to buy the dip.
Well, yes, I think, the market has fallen quite sharply and quickly. So therefore, you have to wait to see where the bounce comes back. So far, it's not as if the trend has suddenly changed, but it does look like there is the first sign of a little bit of a fear coming through. It was only a question of time because of the kind of IPO numbers that were coming through, that there would have been some pressure on the secondary market as well. But we'll have to see whether or not it sustains or whether the market goes back to its trend.
Okay, yes, the market has seen quite a bit of pullback, and portfolios are bleeding a lot more than what the frontline index is telling you, because if you look at the broader markets, that is where bulk of the correction has been. But Anand, if you had to kind of keep a shopping list ready per se in this dip, A, would you start deploying already? And secondly, which are the pockets that you would first try and put some money to work?
Well, there isn't that much valuation gap that has emerged just yet. So therefore, it's not as if you have to be in a hurry to immediately deploy. More importantly, I would be very surprised to find too many people sitting with cash. By and large, given the kind of rally that has happened, most people would be more or less fully deployed. But that said, if you are looking for places where there can be some amount of earnings growth that will be a little more sustained, then it would be go back to the good old, banking, pharma, IT kind of numbers. To some extent, these numbers will be muted. It is not as if you would expect to see a very sharp growth in bank earnings, for example, in this quarter, largely because we're going to have a tepid period of growth for this, at least for this quarter. Same thing goes for most of the other sectors as well. But then you always look forward and hope that the numbers will pick up from there on. Valuation comfort does exist in things like financials at this stage.
Right. Okay. IT in the meantime, that seems to be only bucking the trend right now. Naresh, your thoughts? Because IT has, shown some resilient bouts all through last week too.
So would wait out for IT given the results are around the corner. They've already rallied a lot across the board. So any sharp dip on results would be an interesting time to get in, not at a preemptive before the results. Because majority of the stocks, say from election day lows, IT has been a sector which has done really well, 15 to 20% across the board. So would wait out for a dip to actually add, not at current levels.
Okay, so that's the latest coming in on the IT sector, at least bouncing back, and that's the one which is actually holding out in the green. A couple of these pharma names are also actually doing okay. AstraZeneca, for instance, has been up and about since the start of the day. That Natco Pharma and the partnership that they did has been doing well. From the IT space, it's LTI Mindtree, eClerx. These are a couple of names which are doing okay. And CG Power, that entire foray into the OSAT designing or the semiconductor designing is also auguring well for the stock. Chola Financial Holdings in the last few minutes has moved up. Kalyan Jewelers 2 is looking okay, and Nykaa 2 is trying to bounce back a bit. So these are the moves that are there in the last few minutes. Of course, they still continue to be in the red for now. On the losing side, C Infosystems, PNB Housing, these are some of the names which are in the red right now. But you know what, we are just around the festive season, and the start has been a bit tempered, at least by some yardstick as to what Father, etc. have to tell us. But others believe that this is likely to be a great festive season. In fact, when we did speak with a whole host of appliance makers and sellers, they were talking about how it's expected to pick up, and Mr. Tyagarajan of Blue Star also said that he's expecting the industry to grow at a CAGR of 19 to 20% till FY 2030. Sorry, FY 2030. Hear out what they had to tell us.
The India market will grow at a healthy double digit, and we believe that we will grow at better than the market estimates. We want to consolidate our leadership further. With the launch of the new AI Galaxy Foldable Series Buds and Watch, we are very, very optimistic with that.
So internally this year, as in LG, we are targeting roughly about 30% market, 30% growth in television business. For us, growth is coming from most of the markets, and if you talk about metro market, the growth is coming from upgrade. So customers are coming and upgrading to new technology like the smart AI technology, and other markets also customers are coming and upgrading to better television. Like they used to have conventional TV, they are upgrading to the LCD LED kind of televisions and to a bigger screen size. So demand is there from tier 2 tier 3 as well as the metro market.
Confident that the festive season for air conditioners will be good. The CAGR up to 2030 is more than 15%. And the air conditioner category, our estimate is it will be at least 19%. Will more than double.
We are on a high run this year during Diwali. We should be looking at a growth of at least 10% over last Diwali. And mind you, the last Diwali was also good. So on a high base, a growth of 10% would be really great. Biggest advantage in our consumer durable is the EMI offers. So I think that's what's been propelling our sales in the last 5 to 7 years, and that's the way forward. Is continuing and it is getting stronger and stronger. So what we are seeing is even in the first 6 months of this year, Jan to June, the reports which have come in, we have seen a higher growth in all the categories, across all the categories in premiumization. So
Right, okay, that's the take coming in across what the consumer industry has been saying. But Anand, we've been talking about this, the slowdown that one has seen in passenger vehicles, and today FADA's data also has indicated the same. Do you think an uptick can be made, or recovery can be made this festive season?
The festive season was obviously a very large part of the overall demand, so we'll have to see how the numbers pan out. But from whatever anecdotal evidence one get, it is clear that for most auto sector, the inventory levels seem to be rather higher than anticipated at the vendor level, at the distributor level, and therefore that's not a very good sign. Importantly, the bulk of the portfolio of most of the companies is not yet EV, and the incremental demand is coming through on the EV side as well. So I am still not very bullish on this sector overall.
And for now, the dip that we have seen of 10% in the month gone by as per the FADA data, and the fact that the inventory is at record high level and the EV sales have moderated, all of that adds to the worries. In fact, these are the topics we discussed with the president at FADA as well. Hear out his take.
The inquiries have actually gone up fourfold, which is very, very heartening. And hopefully, this would also lead to bookings. It's already started leading to bookings. And the retails will start soon because the start just got over last month. The customers have started walking into our showrooms, inquiring about vehicles, talking to us about the deals. So a booking would typically take a day or two, and then the finance process might take a couple of more days, and then it'll be another couple of days for the RTO process. So we would be seeing the retails happening from this month. The dealers are very, very positive, and they're quite happy about the demand coming back. We are hoping for a bumper season during the next 40 days, and hopefully this would lead to the reduction in inventory.
Okay, hopeful of a recovery, but for now it hasn't picked up the way the street was expecting. In the meantime, just taking stock of what else is happening in the market, because there seems to be a lot of volatility. So just tracking as to what's really making moves right now. So it's IT, which is in the green, and it's same LTI, Mindtree, Persistent, LTTS, which are in the green right now, while the PSU banking space continues to be under pressure. In fact, if you look at IOB, that's down 5%, Central Bank, UCO Bank, Union Bank, they're all down and out. Anand, wanted your take regarding IT, with TCS just around the corner on October 10th going to report its numbers, and the expectation are that this time around it's going to be a bit more stable quarter, and the commentary is going to get incrementally positive, given the fact that the rate cut cycle has started and there's a bit more clarity, at least with respect to how the economic turn is going to be, apart from the geopolitical tensions. Do you think it's time to bet on the IT names, or would you wait for the earnings season and then take a call, because the index has run up 10-11% already in the last 2-3 months?
That's true. There isn't much. It's not as if there is anything which is dramatically to be discovered or where there's likely to be a huge surprise. However, the commentary will likely be positive. One expects to see most of the frontline companies actually reporting or guiding a little more than what they have in the past. I think they've built down the expectations quite dramatically. And from here, hopefully, the commentary at least will turn a little more positive. But that said, don't really expect to see volume growths running into mid-teens or anything of that sort. You're still looking at fairly anemic kind of growth rates. And given that the valuation of these companies is also significantly higher than in the past compared to the growth, it's not as if these stocks are cheap. But overall, I think that's still a somewhat less overweight sector for most people, likely to be a better defensive place to hide in case the market does turn weak.
Right, okay, let's just see what's actually lagging still in the market. And when it comes to the broader end of the market, Idea has really gotten clobbered. It's now down 6.25%. Hindustan Copper down about 5.5%. Tata Power is down over 5%. GMR Infrastructure, Federal Bank, these are some of the rank underperformers. Within the large caps, of course, like we mentioned, Axis has again slipped down about 3%. HDFC Bank still languishing about 2.5%. SBI continues to be a rank underperformer within the banking pack. That's down over 3% as we speak right now. Adani Ports, Adani Enterprises, there's Titan, there's Hindalco, ONGC, which is down 2%. So a large part of the market is still languishing, although select few banks at least made an attempt for a recovery, failed at that though. That said, just looking at some of the realty plays, while of course Macrotech Developers is the one which is actually holding out, but that can't be said about the rest of the pack. Godrej Properties still in the red, DLF down 2.25%, and Oberoi Realty as well lower by a good 3.5%. And Naresh, realty as a sector was the most beaten down also last week, right? Do you see a continual weakness?
So I would expect somewhat of a bounce back across the real estate space. We've seen a good 10% correction in some of the names. DLF has corrected from 940 down to 800, 840 band. You have Oberoi Realty, which was rearing towards a breakout, has corrected well, coming back to supports. So a lot of these names are back to August lows. Could be an interesting price point to play for a bounce back in some of the large realty names.
Right, okay. Before we move on, the Indian market remains very competitive, even amid good growth. That's the word coming in from the Airbus global CEO. He spoke with ET Now and added that challenges will remain in the aviation sector.
Indian market is booming, fueled by the growth of the population and the growth and the increase in wealth and access to flight, by the fact that new airports create new connections. But it's indeed a very competitive market. And the Indian airlines are actually competing fiercely for that market. So it's an overall growing one. There are challenges that come with growth, especially fast growth. But I think there can be no doubt on the fact that it's poised for success. For challenges, growing at that pace is not something that is easy. And we see ourselves, by the way, having a responsibility and an opportunity as well to contribute to making that growth a good one, safe from the standpoint of flight safety, but also competitive, so that the growth can be managed. But indeed, it's a competition, and it's a fierce competition.
Okay, that's that from the Airbus CEO. In the meantime, just looking at some of the other underperforming sectors, and while of course banks did attempt a recovery but failed to do so, like we pointed out, SBI, HDFC Bank, IndusInd Bank and even Axis continued to be under pressure, although Axis did make an attempt at recovery, but that's also gotten sold into. Kunal, quite the volatile move for the entire Nifty banking pack, led by, of course, large caps. In just last half an hour, it's been all over the place.
Yeah, but generally, we've seen historically that large bouts of volatility, and if it happens on an intraday basis, they generally are indicative that a near-term bottom could be at place pretty soon for the indices. And to add to the fact that the RSIs for both the Nifty as well as for the Bank Nifty have gone to single digits now on the short-term time frame charts. Now that's generally an indicator that the markets are oversold, and we could be looking at a reasonable bounce. Now what matters over here is that if in case there is a bounce over the next couple of days for the indices, which are the sectors which would probably be going through a recovery phase, and which are the sectors which could probably start to get back into a relative outperformance mode. So these are the two important aspects to watch out for. The ones which could be seeing a short covering or maybe some pickup of price performance, they could be the one where the rally may just about last for a couple of days. But the ones which show signs of relative outperformance and both in terms of momentum as well as price, I think that's where we might start to see some trending nature oriented sectors as well as stocks shaping up. So I would probably believe that over the next couple of days, we need to see more of patterns for these sectors, which would try and guide us towards whether this could be just about a meager bounce, which would be looking out for the indices, or a trend in the making.
Okay, let's see whether it's a trend in the making or just a dead cat bounce, as perhaps some of the participants are believing it to be. But take a look at HDFC Bank. That one is seeing quite a bit of dropping right now, 2.5% lower, and that alone is contributing 50 points to the downside. Some of the large trades have happened on that one as well, so the volume is on the higher side. Clearly, HDFC Bank seeing some of those green candlesticks, but then a big red bar emerging, telling you that there is that profit booking which is happening on HDFC Bank, and this is despite that positive news flow coming in on Friday, that the overall QT provisional updates have been decent, and the fact that it's likely to get a higher weight in MSCI, bring in any of the good news. For now, HDFC Bank is in the red. But let's take some BDSC trades. If you are a compulsive trader, Naresh, what are the trading opportunities that you are identifying in this market?
So first is a sell on Siemens, which has shown us short-term topping out sign over the last two sessions. Stop loss at 7,050, target price of 6,900. Second is a defensive bet on ITC with a buy with a stop loss at 506 and a target price of 515.
So an STBT trade coming in on Siemens. ITC is something which is still looking interesting given the defiance that stock is showing in the wake of what's happening in the market. But Kunal, what are your trades?
So I'll go with the Man Bharti Airtel. That's a chart which is still looking attractive. So we'd look out for targets in the range of 1688 and stop loss could be kept at 1638. And the second would be a sell on Balkrishna Industries. That's a chart which has made a fresh swing low on a multi-day time scale, broken below the 2850 mark. So we'd look out for targets in the range of 2720 and stop loss at 2860.
Okay, so those are some trades that one needs to watch out for. Last 10-15 minutes left for the trading session, but one doesn't know which side it will go because we have dropped below the mark of 24,700 on an intraday basis, and the highs of the day were well above 25,100. So we have traveled quite a bit during the trading session, and a lot of those ups and downs really in the market at the moment. The Bank Nifty is again down and out, almost 900 points. I mean, it's just baffling the way that index recovered over 1,000 points in a matter of few minutes, and from there quickly gave up all of that, and it's right now down about 900 points as we speak. Anand, within the banking pack, is there any name that becomes a clear-cut buy or a high conviction buy if you're a medium-term or a long-term investor?
Well, I think, you have to remain with the largest of the lot. So I would argue that you'd still find that if you're
just a bad line that we have with Anand at this point of time, and we'll try and rectify that. But Nuresh, just coming on the banking index, which name amongst that looks the strongest? Is it ICICI Bank given the outperformance today?
So I would still go with the basket of HDFC and Kotak, which has actually underperformed in a major way. HDFC Bank is back to 1600 odd levels, which was the low in August. 1580, 1600 was the low, and that point of time Nifty was at 24,000. So that looks interesting. Same way, Kotak Mahindra Bank closer to this sub 1800 levels is at the same prices where it was in 2021. Back in 2019, just before COVID, start of 2020, it was at 1750 levels. So the stock has gone nowhere for the last 4-5 years. This is the place where risk reward still looks interesting. So I'd go with two large names. And today we've seen very large volumes indicating possibly a lot of selling has been getting absorbed. We've seen the largest volume take on HDFC Bank apart from the MSCI days.
Right. Anand Tandon is back with us. Anand, you were talking about what you would be tempted to buy within private banks in this decline.
So I was saying that the frontline companies still look quite attractive. I mean, there will be obviously a slowdown in growth in this quarter also because HDFC is having to readjust its loan growth compared to its deposit. And that obviously means that you need to reduce your CD ratio, and therefore deposits have to outstrip loan growth. So for the near term, at least, the numbers will still not be great, but I think the valuations compensate for that. Kotak again, like Nuresh said just now, I think there is some value there because of the fact that it hasn't moved too much. Again, a management change has probably will take a while to absorb, but overall, it is still at this level there is not much that you should be losing there.
Okay, so that's the view on some of the banking names so far. But Heidelberg Cement has also actually clarified. Remember that stock had shot up 10% at open because there were reports going around that Adani is on the lookout for buying some of the stake in that company. But then that stock has cooled off a bit, and there's that latest clarification coming in that the company is unaware of any such development, and they have been, of course, informing the exchanges as and when there's anything to inform. But within the cement pack, anything that looks interesting at all, Anand, and also the paint sector, because there was that interesting update that came in from AkzoNobel, wherein the parent is looking at some sort of rejig in the Indian arm. Who do you think could be a likely buyer for the same? Maybe Birla Opus or the other incumbents, JSW, etc.?
Well, when you have new entrants entering a market, especially one which is where there is a dominant player and the others have been also growing their market, it becomes a little difficult to find winners because still the, it's like what happened in telecom when Jio entered, right? For the longest time, you will have to have price pressure. The same thing is likely to play out in paint, so I won't be in a hurry to buy that. I think it will take a while for the dust to settle on that. What was the other sector that you mentioned?
Cement, because there again the consolidation seems to continue with the latest report on Heidelberg Cement.
Well, yeah, I mean, so the only play in cement really is companies which are up for sale and might be bought back by the larger players. Other than that, I don't see any play in cement as well. The capacity utilization continues to remain weak at a level where, by and large, most companies are not going to make supernormal profits or even very high levels of profits. Most of them have not managed to sustainably maintain an EBITDA of more than 1,000 rupees a ton. So I think you're still looking at a sector which is growing on the top line, but yet to make economic returns.
Okay, that's the take on some of the cement players as well as paints as well. In fact, some of those paint companies have really had a volatile ride in the last fortnight or so. First, the cool off on crude all the way to 70, wherein they gained. And then, of course, the spike up that we've seen ever since the geopolitical tensions between Israel as well as Iran escalated, you did see once again that trade also getting caved in. Kunal, any observation that you're making on paints or even tires for that matter?
So, not too much bullish on the stocks, at least as of now, because of the recent selling in the last 4 to 5 days. In fact, what's happened is the likes of Asian Paints has managed to break below a critical support of 3200 mark. And the manner in which the stock has broken this critical support is with a gap down. And I think that's one of the concerns for the stocks emerging. So, in this leg of price correction, these stocks have formed major resistances in the form of gaps being formed on the way down when these stocks have gone through a price volume correction. So on the way up, whenever these stocks get back into a recovery phase, they would probably face a lot of resistance at this major gap resistance. That's where I would probably want to believe that if these gap levels are crossed, that's where one should look to buy rather than going for a preemptive of a bottom formation at current levels.
Quite wobbly actually for the US futures, to be honest. I mean, it's almost a 200-point decline that the Dow futures are now looking at. I mean, it's still about 0.5% on an average kind of dip, but 0.5% down for the S&P futures as well, and the Nasdaq also lower by a good 0.7, and that's equating to about a 140-point loss as we speak right now. And yeah, our markets have really been the world underperformers because it's really not that bad for Europe. It's marginally positive, largely flattish across the board, marginally negative, I stand corrected. FTSE, of course, is marginally in the green. Asia has had pretty a good day, actually. So we clearly seem to be the region underperformers, led by power, telecom, chemicals, infrastructure, metal, cement. Can go on and on with the list. In fact, it's only technology with a few odd names which actually managed to hold out and managed to surface up the index. It's been a bad day even for the breadth of the market. Only 24 stocks in the entire F&O universe have managed to close in the green with a count of a good 161 to the decline. So it's been quite a poor breadth as well that we've got handed with today. But thank all of our experts, Anand Tandon, Naresh, as well as Kunal, for joining in. We will have Snehi in just a short second from now to try and analyze how the closing trades have been. But today, of course, it's not been a unidirectional move by the market, as has been the case all through last week, at least on Thursday and Friday. But Snehi is here to highlight all the volatility, the late hour pickup by the banks, and then how that uptick also got sold into. Snehi?
Well, absolutely. So it's been yet another lackluster day for trade. If you take a look at our market, Nifty closing above that 24,800 mark, but significantly below the 25,000 mark that we saw. Nifty slip below today. A 0.7% cut coming in. Sensex also in tandem. 0.6% cut coming in on Sensex as well. Advanced decline ratio significantly in the favor of the declines today. And Nifty Bank also, if you take a look at that index, 1.5% cut coming over there. Remember, we've seen a lot of Q2 banking updates coming in, and I'll talk about it in just a short while. But also, let's pull up the broader markets and take a look at what they have done today, because they seem to have significantly underperformed the benchmarks. You have Nifty mid cap down almost 2%. Nifty small cap seems to be the real loser here, because more than 2.5% cut coming in on the small cap front as well. But if you take a look at where some positivity was seen in the markets, just a few minutes before closing, in fact, you had slight recovery being seen on the Nifty because of HDFC Bank and ICICI Bank. However, that did not hold on for too long. LTI, Mindtree, ITC, M&M, Bharti Airtel, Bajaj Finance are some of your handful of winners, if we could call it that, in today's trade. However, big losers today from the Nifty pack include Adani Ports, NTPC, Coal India, Adani Enterprises, SBI and Power Grid. The utilities and the PSUs did not do well at all today. But if you take a look at some other sectoral gainers and losers, you only had IT that was showing some resilience over the course of the day. Remember, this week we also kick off IT earnings. We kick off the Q2 earnings season with the IT companies. So Nifty IT 0.5% higher. All the other indices have been tanking away in today's trade.
What's also important to talk about is we saw some strength coming in the market from one stock in the realty space, and that was Macrotech Developers. Good quarter two update coming in, mixed update coming in for Titan, and we also have a lot of brokerage notes coming in. Investec has maintained a hold, Macquarie maintained outperform, Citi has maintained a neutral, Nomura has maintained a buy on Macrotech as well. But let's also shift focus and talk about the entire banking space now. Bank of India updates came in today's trading session. However, the updates were good, but the stock could not reflect the quarter two updates as well. Nomura on AU Small Finance Bank, they've maintained a neutral. Morgan Stanley on RBL Bank, they've maintained underweight. Nomura on Federal Bank has maintained a buy rating, and Jefferies on Bandhan Bank has also maintained a buy rating. So this is a roundup of all the banking updates that we've seen so far. But well, yes, none of this has in fact translated into some good news for the street today, because we continue to tank in today's trading session. Nifty around that 1 month low level coming in 24,817 thereabouts is where we have shut shop for the day.